Hello, everybody. It is the 10th day of March, 2020, if you can believe that. And this is Craig Moser with Maestro Wealth Advisors, here to give you a market brief. And it has been quite a market. So let's chat a little bit about what's happening. Let's do the Dow Jones Industrial Average, which is quite fascinating here. All right, so the Dow Jones Industrial Average on, let's get this date right, the 12th of February, about a month ago, was at 29,415. Before the open this morning, which is where we're at right now, it is 23,851. So a fairly significant drop is an understatement. So a lot of people are trying to figure out, what do I do? So, and the answer is nobody knows. So you have to do your best judgment. But here's what we have done in our portfolio. So these are suggestions. These are not recommendations, and you can take them for what they're worth. But we have reduced our exposure to equities. We have put a hedge into our portfolios, and we intend to try to remain fairly neutral on the bias of either being heavily in equities or not. In other words, we're trying to stay out of the way. This market, it was a market and is a market looking for a reason to drop. So in the grand scheme of things, this may not be over. Coronavirus is what seems to be the catalyst, but it truly is more about people not going to work, and so a disruption in various supply chains throughout the globe. Some of the things that have been exposed is we rely a lot, in this case, on China for a lot of the parts, a lot of the medications, a lot of the things that we want to have, in our production of things. That's produced over there. So if they're not going to work and not producing, and it's not being shipped over here, it's a disruption. So that's sort of what's happening here. So let's expand this a little bit so that we get a realistic look. All right, so I've just changed this chart to 5 years. So when you look at where we are today, which is right over here, and I drew that blue line for the drop, you can see that we're back to where we were over here, which was around 2017. It can happen in a hurry, and it did because of computerization, high-speed trades, a lot of institutional things. Things can move a lot faster than back in the day. So we need to be cognizant of the fact that the market has had a significant drop. Could it drop to where we dropped back in December of 2018? Most certainly can, probably will. So just be prepared for that. When you look at what's happening here with our markets, you can kind of see, that was sort of the top, not a great top, probably better about right there, because we can get 3 points, maybe 4 if I try hard. That's probably where the market sort of would have traded at in that line. But the rest of this is purely repositioning of portfolios. Some of it's fear, but most of it is the big money moving to bonds. So let's talk a little bit about bonds for a moment. Now, what I'm going to pull up is an ETF for U.S. Treasury bonds, and it's going to be a 7 to 10 year Treasury. You can get this with Vanguard. You can get this with, in this case, iShares, which is a BlackRock product. All it is exposure to 10-year Treasuries, pretty much as an index. So you can see right here where I had just put that cursor, that blue line, that's sort of your average price. That's maybe your resistance there. And you can see that we're substantially higher than that. So if you can remember back to '08, if you were an investor back then, U.S. Treasuries were pretty much the only thing that did well in that 2008-2009 timeframe. Then it stopped doing well. But at the end of this, as we're looking back 5 years, you can see that this price is very high in comparison to what it normally trades at. I could even do a 10-year on this, and you would see that this is a high price. So that is where money is currently going. So just be aware of that. A lot of people are asking me about gold. I'm not a huge fan of gold, but I will tell you gold is up. Why? People see it as a alternative currency and a moderately safe haven for when things don't go well, which is where we're at right now. If you look overseas, so we'll look at Europe, Australia, and the Far East, and I use these iShares just for the visuals. You can see 5 years ago, market up, market down. So we're not as low as we were back in 2016. Market up, really up. That's when I believe Europe had its first run at dropping rates, and then we raised rates, and so the price of these, you can see right here, right here is a tariff. So, when you look at all of this stuff happening in here, you see a lot of volatility, and we are back pretty much to where we were back over here in 2015. So Europe, Australia, and the Far East, on the chin, down like today, gaps down like here. That tells you that there's a lot of uncertainty in the markets and repositioning of assets. So just be prepared for more of this. Our view is, why deal with this? Somebody said this to me the other day. If you are buy and hold, that's sort of like stand there and take it. We're not in that camp. We believe you should move out of declining assets and wait for them to stop going down and indeed start going up. If you look at emerging markets, let's see, IEMG, let's do that one. So emerging markets have been down for quite a while, and this has not helped emerging markets. So we're down here in this range, so making some lows for the 5-year window, making some lows. So again, stock markets around the world are not enjoying this issue with COVID-19. Obviously, as we get into Q1 reporting, which will be in April, we're going to hear how much this has impacted the growth of various companies across the United States and the globe. And we just need to be prepared for it and understand that, like everything else, it'll pass. It's just how long will it take is the real question. So protect yourselves, and we'll be back in touch. And with that, we're going to close out for today. I would like to mention that we have some courses, New Reality in Your Retirement at Wake Forest University. That's March 16, 17 through 21. So take a look. It's rwaacademy.org if you're interested, and you can sign up for a 2-part course that I will be teaching. Make it a great March.